Goldman being punished for its success. Well, Liz McDonald has been following the numbers and the investigation, Liz, and is that what this is about? Oh, they did so well, something must be wrong with what they've done?
You know, that's the water cooler talk on Wall Street, Liz. It's interesting that you bring that up. Remember, Liz, 6 months ago, you and I were reporting on air about how the FBI was cracking down on, the small bore mortgage brokers. They said the perk walks would be coming on Wall Street. The small bore mortgage broker crime is sort of like this white-collar street crime. Now a really interesting development. Senate Permanent Subcommittee on Investigations. Goldman Sachs apparently was subpoenaed. Also, watch this, Deutsche Bank, Washington Mutual, and J.P. Morgan Chase. They're at the top. You see Goldman Sachs. What they're looking into here, Liz, is essentially a subprime bond factory and whether or not, these people, analysts and, the people who sold these CDOs and subprime bonds defrauded investors. Now, we know that Goldman Sachs has been sued, Liz, and this is interesting. Goldman Sachs has been sued by, investors in, in the countrywide bond deals. We see IndyMac, also subprime bond investigations and lawsuits there. Right at the top, New York State has sued Goldman Sachs over the countrywide bonds, IndyMac subprime bonds, and Massachusetts actually won a $60 million settlement from Goldman Sachs. Liz, this could be really embarrassing for Wall Street if Carl Levin and the panel down in Washington move ahead with these subpoenas. Remember, the credit rating agencies were really embarrassed last fall with emails that came out about how they fell down on the job.
Yeah, Lizzie, what do they got?
So
emails? Do they have emails or something?
They would be able to get emails, internal memos. Remember last fall, the credit rating agency said in one email it could be struck by cows and we would rate it. So what they're trying to get at here in the Senate is who is defrauding whom? Who built these bonds knowing that they were reckless, knowing that they were fraudulent, and knowingly pushed them on unwitting investors? That's the key here. The FBI has been digging into securitizations, devilishly complex when you x-ray them, really hard to figure out who's at fault. But if this moves forward in the Senate, watch out. This is a big deal for these Wall Street firms.
Okay, Liz, thanks for setting it up, teeing it up for us, because our next guest is ready to take the swing. It's a former Goldman Sachs insider, and she says if she learned one thing working on Wall Street, it's that numbers lie. Joining us now, Nomi Prins, Demos Senior Fellow and a former Managing Director at Goldman Sachs, also author of the book, It Takes a Pillage. Interesting title, Nomi. Welcome to the show. Thank you for coming on.
Thank you so much, Liz.
What's this investigation going to dig up on Goldman Sachs, if anything?
I think the investigation is going to show two things. One is that Goldman Sachs was doing business like Goldman Sachs and a lot of other banks named in this investigation and generally do, which is that they package assets and they stuff them into these CDOs. The assets individually were weak. Goldman Sachs made $4 billion in profits at the end of 2007 at a time where Citigroup, Merrill, other firms were posting mortgage-related losses. There was a knowledge of what was going into the CDOs. Their trading desk was selling them, getting rid of them, but they were pushing them on to customers and telling customers that these CDOs were still good securities and that they would be protected in terms of whether there was more down news in those mortgage products.
Now, let me just clarify for our viewers, collateralized debt obligations, that's a CDO, and it was when a bunch of subprime and really weak kind of bunch of subprime mortgages were packaged together, sold off, and people bought them thinking that there might be a better turnaround at some point. But is there anything insidious that these guys could pin on Goldman Sachs? I mean, we all read the Rolling Stone article about how Goldman has been at the helm of every depression and disaster as far as the financial world is concerned, and that somehow they had their fingers in it. Couldn't some of that, Nomi, and you've been on the inside there, be just sour grapes because these guys were the smartest guys in the room?
Well, a lot of this stuff is absolutely business as usual. Goldman is very good at doing what it does. There's no dispute. And part of what it does is make money very, very well. And when you scoop weak securities into a package, a CDO package like you were just talking about, it has that impact. You're getting rid, as a trading desk, of your junk, and you're putting it somewhere else. There is an inherent profit to that. Whether that is actually illegal or actual fraud, that's much, much harder to show.
But here's
because
where
Goldman
the
and
fraud,
any other of these companies...
Here's where the illegal aspects and the fraud come in. If the products they are selling to people, they knowingly understand are deteriorating at a rate that could then hurt the clients, but as long as they get out in advance, there's the problem, I think. If somebody could pinpoint it through an email or something like that, is that what Goldman does? From your experience, did you see that kind of behavior?
It is what Goldman does, and it is what other banks do, particularly at the time in those mortgage-related securities. It was selling them. There was no dispute about that. The profit from selling securities off of its books was completely public. At the same time, yes, and if this investigation shows the exact timing, they were selling packages of those products to their customers. That was absolutely going on at the same time. So the question is whether you can argue that that nature of securitization, of packaging those weak assets into something that has a lot of weak and maybe some strong stuff within it, is really the fraud. And if you can show through an email, through a chain, through any sort of conversation that, yes, I know this piece, this one asset that I am now dumping into the CDO that I am selling to this pension fund is absolutely going to accrue down to zero.
Sure,
I
sure.
know that, but I am sticking it in anyway. That's where you begin to prove it. Otherwise, it's literally just shifting things from their books into the CDOs that go into their customers, and that's what they and other firms were doing throughout the buildup of what became the subprime crisis.
Goldman Sachs just came out with some boffo earnings numbers, and their people may get some of the best deals as far as bonuses are concerned ever. How do you think Goldman was so easily able to bounce back so quickly from what we were told was a financial precipice where we were going to fall off Mount Everest?
Well, absolutely. First of all, they were managing to bounce back very quickly because they got, and this is not really discussed that much in the news, they got $62 billion of federal capital. How? They got $10 billion from TARP. We all know about that, and they just recently paid it back. But they also got $52 billion worth of subsidies from the federal government. They got to raise debt with an FDIC backing.
Sure. Yeah.
They got part of a commercial paper program that was open up for banks to loosen credit in the market. They got $11 billion through that. And they got almost $13 billion out of what the government gave to AIG to help AIG with its problems.
That does
so
help,
really, if you're
it?
floating on $52 billion extra dollars of capital, you should post a profit.
Okay. Nomi Prins, Demos Senior Fellow and former Managing Director at Goldman Sachs. Your perspective is an interesting one. You came from the inside. Thank you so much.